We're glad to have you back. Let's move on now. The Nigerian investment landscape has been abuzz with the recent news of Blackrock announcing its decision to exit the Nigerian market. This move has sent reactions through the country's financial sector, prompting a flurry of decisions and discussions on the potential implication for Nigeria's economy. One of the key concerns raised by experts is the potential impact of Blackrock's exit on foreign direct investments in Nigeria. But are there key issues? What are these issues that we need to talk about? Let's get talking. I'm being joined by Chief Economist, at Second Stacks, Mr. Benjamin Boucher. He joins me live from Accra, Ghana. Thank you so much. Good afternoon, and thank you for your time.
Thanks for having me.
Yes, I will start with saying that why is BlackRock joining the bandwagon to exit Nigeria with a huge value of about $400 million US? That's a lot of money.
Well, the entire $400 million is not invested in Nigeria. This is a decision they felt they needed to take, largely because of what we've seen as a trend in investments across the globe since the pandemic. There's been a flight to safety, whereby a lot of the capital, seeking returns has kind of moved towards the United States, where the markets have really outperformed and interest rates have been really high. So investors have been earning quite a return. And what that's done is that it's made frontier markets like Nigeria a little more tricky to navigate. And given that this is an ETF, the company that manages it, Blackrock, they were always going to be pretty mechanical about this, in the sense that if they weren't seeing the liquidity so that folks could get in and out easily, they were probably going to need to exit. But again, I have to stress, it's not 400 million that's leaving Nigeria. I think it's about 15 million or so that was allocated to Nigeria, which is exiting.
Oh, okay, yeah, a portion of that fund, is important to us. You know that this country at this time needs foreign direct investment, foreign portfolio investments at this time. So definitely, we want more of these funds to even come in. But that's understandable, and thanks for that. But let's take it quickly and understand that our government, as Nigerian government at this time, is taking actions on major reforms across the economy. We see liberalization of the foreign exchange market. I'm sure you're aware of subsidy removal. Why not exercise patience and offer some creative advice on structuring the economy for partnership growth?
Well, the BlackRock Frontier ETF isn't really positioned to engage folks in that way. These are really liquid, or they're meant to be very liquid assets that investors seeking exposure to frontier markets can easily get into and out of via the New York Stock Exchange. So I'm sure the way they see it, as they hold a fiduciary duty to the folks who invest in their fund, and if they see, outsized volatility or just complicated return prospects, they were going to have to exit. That isn't to say that other frontier ETFs might not enter the Nigerian market. It's just that for this particular ETF, the conditions that they are mandated to invest in no longer were met, and therefore they were forced to exit.
Well, let's now look at the long-term prospects of integrating African stock exchanges for wider growth. How far have we gone with these plans? Can you give us updates?
Yeah, sure. I mean, so, here at Second Stacks, we're very, very focused on this particular effort, right? Connecting the capital markets across the continent is pretty much our primary goal. So what we've done is we've partnered with the African Stock Exchanges Association and exchanges in countries all over the continent. And right now we're in Ghana, Kenya, Nigeria. So that means that these three markets are integrated, particularly for institutional investors, but those three markets are integrated. BRVM, which is Francophone West Africa, and includes 8 additional countries, and 1 exchange housed in Ivory Coast, will also become part of the Second Stacks platform hopefully by year end. And then after that, we're looking at Morocco, Egypt, South Africa, all the other large exchanges. So hopefully, once BRVM is on by the end of this year, next year you add Morocco, Egypt, South Africa, you'll pretty much have an integrated capital market on the continent in the sense that you'll have about 85% of the total market capitalization of the continent, if not more, on one single platform, and thereby they will be integrated.
Interesting stuff. But some reports also shows that some African companies seem to pay lip service to listing across major African exchanges. Well, they prefer London and sometimes New York. What do you think can African markets in the integration cope with this development?
Yeah, this is really the other side of the coin, the same coin, regarding the Blackrock exit. You see, a lot of folks feel that if there isn't depth in the market, if there isn't enough liquidity, and folks can't move easily in and out of large positions, that it'll be, I guess, the wrong destination for their listing, to list here on the continent. And that's why some of the larger companies might prefer to list in London or New York. But for us here on the continent, there's, like you said, there's steps to this. Integration is absolutely one of them. The reforms that you've discussed going on by the Nigerian government, this is the largest economy or the second largest economy on the continent. This is another. And probably more impactful, overarching all of this, is the reforms that are going on with the concessionary financial architecture. That's the World Bank, the IMF, and then also the AFTA integration, the African Continental Free Trade Agreement. These are events that once they are completed, you're going to see a much larger single market on the continent and a much deeper market in our capital markets. And with that, I mean, you're probably going to see a lot fewer companies opt to list offshore and rather just list on the continent.
But almost finally, really, I still see some global issues also affecting maybe markets in countries like Nigeria, where we expect investments to flow in. Do you think any of this global issues, the wars and all of this that's been happening, conflicts and all, do you see them impacting markets globally and, of course, on the local side?
Well, absolutely. I think one could argue that the geopolitical climate has been one of the most impactful factors affecting global capital markets. It's the primary reason you've seen this aggressive flight to safety, that and higher for longer interest rates in the West. Other countries, the EU, the Swiss, the Canadians, they've begun to lower interest rates. So that may provide a small amount of reprieve here on the continent. But for the foreseeable future, this geopolitical paradigm is what is and has driven capital market allocations and will likely continue. That, and you also just have this massive tech overhaul with AI that's mostly being pioneered in the US. So that's also what's driven things in that direction. The way I think about this and the way we think about this here is that at this point, when the markets are a little volatile, there's a little bit of you have this flight to safety scenario playing out. It's important for us to do the work here on the continent so that we bolster our capital markets and our macro economies, which is why, again, I point to the need for us to successfully integrate the capital markets and to successfully integrate the single market through AFTA. And then on top of that, to demand and to place a lot of emphasis on expanding the amount of capital that's available from our partners around the world. So if we get those three things right in the near to medium term, the long-term prospects for Africa, Nigeria, they will be very bright, and we're looking forward to it.
Well, that's really a good way to live it, because I'm looking at all of this and the figures coming up. Well, we are still on holiday here, and we'll see the market performance from tomorrow when full work will start. I must thank you so much, Mr. Benjamin Bauchi. We hope to have you join the program again anytime soon to discuss issues around markets and, of course, the economy. He's the chief economist with Second Stacks. Thank you for your time.
Thanks for having me. Have a good one.
All right there. Well, interesting conversation with Mr. Benjamin there.